Yo, what's good, boys? It's Thursday. Didn't trade today. Didn't look as we had other plans. And we had CPI anyways today. Just thought I'd come on and just show you how I would backtest price action data for the day. So you haven't traded. I'm going to show you how you would begin to backtest Nasdaq and ES, what you should mark, and then obviously my personal setup. So yeah, we'll start with M and Q. See out there. Now the first thing that you should start with is marking up the daily opening gap. If you don't know what that is, it is the time from 5 to 6, the hour that the market doesn't trade to. It's the close to the open. So on M and Q we've got this as our daily opening gap, and as you can see at 9:30 we do gravitate towards that. We also just bounce off of it throughout Asia and overnight trading. As you can see, we touch it during London and then we fall, we touch it, fall. So yeah, we always need to mark our daily opening gap. Now this is the same for the weekly as well, which is NWOG. So from from Friday's close to Sunday's open. So we'll find Friday's close. There we go. So we've got this close to the open. That is our NWOG close to the open. As you can see, price respects it during the week, use it as support, resistance, whatever. As you can see on this particular day, was bouncing off of it, and then here when we broke past this bearish fair value gap, we then come back, tuck down into this and the fair value gap and a breaker, and then send price higher. So yeah, you do always want to have your new week opening gap and your daily opening gaps on there, not just for particular Wednesday. You could also mark it up throughout the whole week and just leave it on, but for the sake of a YouTube video it looks cleaner if I just have two on. So I've obviously got new week and new day. Now the new week doesn't get tapped here, so it's not as relevant, so we're just going to delete that. We will mark, did it get tapped? No. Close to the open, but I'll show you how to mark yesterday's as well. So you can see close to the open, close to the open, right there. That's yesterday's new day opening gap. So yeah, we're going to do the same on ES. So we'll mark up today's new day opening gap. So we closed here, we opened there, that's our new day opening gap, as you can see right there. We'll mark yesterday's as well, just for the sake of showing you how you do it. Close to the open, bang. Well, I don't think price we've already pushed past the new week opening gap. So anyways, yeah, that's yesterday's, and then this is today's, which you can see on ES is already respecting, and on Nasdaq we've got less of a respecting. We've got more wicks on ES, and NQ we've got one body close over. So anyways, that's what I'd mark. We're already 5 minutes in. Hope you understand how new day opening ups and new week opening ups work. So you want to mark them both, just to see how price reacts off of them. We can then move on to regular trading hours. We'll start with NQ, and the second thing you want to mark, so we've got new week opening gap, new day opening gap. We don't really need this on here now as it doesn't touch. Do I still have it on? No, got rid of it. Cool. So yeah, so after you marked your new day opening gap, I can turn this off now. You want to go on to regular trading hours, and you want to mark your opening range gap, which is, if you look at specifics, it's the last print 4:14 p.m. So the close to the open. So you'd mark that as your opening range gap, as you can see. And we would then, I suppose we'll do it at the same time so we can monitor. So we've got the close to the open. Cool. Next thing you want to mark is your macro times. So I'm gonna mark your macro there, 10 past 10, and then 10:50 to 11:10, and then yeah, that'll be the morning session macros. So 9:50 to 10:10 and 10:50 to 11:10. Cool, we'll start on NQ. So as you can see, today we got I don't know if you call it this, but I'm just gonna call it a bearish opening range gap, meaning we closed below yesterday's close. So our opening range gap, okay, technically it's a premium opening range gap because we've got to move higher into it. If it was down here, then I suppose it would be a discount, if that's what you want to call it. So yeah, we've marked up our new day opening gap. We've got it right here. Now, what can you use new day opening gaps for? You can use it for drawing liquidity. You could use it for price to use it as your high time frame PD array. You can use it for anything really. It's just a strong magnet that price will gravitate and fill in. Yeah, so obviously we've got our bearish, our premium opening range. Now what ICT says is from 9:30 to 10 o'clock, there's a 70% chance the price will manipulate lower in a premium, tap into some key level, sweep some liquidity, and come and fill at least 50%. And as you can see, from 9:30 right here to 10, we come up and fill 50%. So yeah, if you want to snag a trade there, you easily could. But yeah, we'll have a look on regular trading hours to see if there's anything. I see this minor sell side liquidity inside of this BISI. We can look on the higher time frames, 1 hour, nothing on the 1 hour, 2 hour, 4 hour. So yeah, we're still inside this 4 hour FEG or BISI, buy side inefficiency, buy side imbalance, sell side inefficiency, or just bullish fair value gap. So yeah, we've obviously got that. Don't tap. Do we tap? No, we don't. Let's go on to electronic, see if we've got anything else. 4 hours, yeah, we're in this 4 hour imbalance. We don't touch the top of that. We're obviously, oh, that is the wrong one. Obviously come down, wicked 50% and the lower quadrant. And yeah, didn't fill in that bottom part. We left it open, which is good to see. And yeah, so that would be for NASDAQ. Got to regular trading hours now. But yeah, we've got this buy side, sell side liquidity inside this imbalance, and we can then wait for our macro, which is 9:50 to 10 past 10. Now it looks like we get quite a, we've got a rangy 9:45 candle. Oh yeah, before, that is not what I wanted to do. Before, you do also want to mark out your data high and low, which is 8:30 right here. So you can mark that. As you can see, we do take the data high out and start reversing off of that. Reason why I'd mark the data high is we've already swept this data low during pre-market, and we've also opened to a premium opening gap, so the likelihood of it coming up to then bounce off the levels to then take up data high is quite probable. If we had a discount opening gap, I'd mark the data low and data high, but in this example data high has already been taken. So yeah, we've already got a strong draw on liquidity. We've got data high with a bearish with a premium opening gap, so that's quite a strong draw on liquidity. And yeah, so we'll get down. Now with this trade, it looked like on NQ you've got a very big 9:45 candle, meaning the CSD would be higher up, so it wouldn't look like you get, I suppose you could get an entry around here if you just did a 5-minute CSD. You wouldn't be, well, you'd be in the secret macro, but the original macros was just choppy here, and then when we hit this next macro, we then come back and go to TP. So yeah, clean, look clean. We'll see on ES. Yeah, ES looked like we had a smaller 9:45 candle, meaning a quicker CSD, if that makes sense. 9:45 candle was quite large, so it took 1, 2, 3, 4 candles to change the state of delivery, but with ES we took 1 candle at the macro, which is kind of what I like to see, and then we come back down and distribute to data high. Now I'm going to mark data high again just on here. As you can see, the exact precision of the markets. So yeah, that's data high. Like I said, we've opened up to a discount, no, a premium opening gap, meaning we've got a higher probability to come up and fill it. We've got a data high as well, so that's just even more perfect. We'll go on to the 15 for ES and see that time. So 10:45. This is 10:45, and there was no sell side. Didn't get swept, so we did have an SMT there as well. We didn't have our fair value gap because we had one from 10 o'clock. So the 10:30 was the low. If we look at ES, 10:30 did not provide a fair value gap. So we do have an SMT at that. So as you can see, 10:45's low was taken out at 9:45, and at 9:45, 10:45's low was not taken out, meaning we have got an SMT right there. go to NQ, we'll mark that SMT. So the better trade to take longs from would have been ES, because it's showing less need to be bearish to come down and sweep this low. Both made that data high, and in this case it did look like NAS moved a bit more, but what I talked about with that 5-minute candle right here, you wouldn't have got an entry until after macro, but with ES we had a smaller 945 candle. Reason being is because we didn't sweep that low, so hence why the volume dropped from here. And we got our CSD right there, and you can see this candle, we'll look at the open, 582025. Look at the low of this, 582025. So it's literally touched it to the tick. So that would have been your 5-minute CSD entry. Now you could have completely entered on these longs. Literally, I can put my entry there because it came down to the tick. You'd put your stop at the body minimum. If you're feeling a bit more risk adverse, put your stop at the 3/4. We'll just put it at the body. And in this instance, if we did not have CPI, you would have wanted to partial around the upper quadrant or the lower quadrant, the upper quadrant or the 50%. Right there. Now, because we have got such a strong draw on liquidity, we've got the daily opening gap and we've got data high, you wouldn't have wanted to go break even, because the potential of this macro, and I know I'm talking in hindsight, but I've seen this play out, potential of this macro to come back down straight to entry and reverse if we haven't taken data high, if we haven't come to the daily opening gap either, that's even stronger of a draw on liquidity. So that could have been your trade, and I am going to journal that because that is literally textbook. Literally textbook. Couldn't get better than that. SMT at the key level, 5-minute CSD in macro, and the strong draw on liquidity. That is literally textbook. We'll put this link just there. So yeah, that's ES for you. We can look on the 1-minute time frame after that 5-minute CSD just to see. We would have got our CSD at 9:50. So at 9:55 we can start looking for 1-minute entries, which here. Now, as you can see, 9:55's here. We've got this bullish fair value gap right there on the 1-minute time frame. And if we actually split this into the quadrants, like ICT says, you want to buy at the top of that. We tap back into the CSD, and we then also tap the 1-minute. So you would have had your limits on the upper quadrant, but it comes and touches that to the tick. Now with the 1-minute entry, it means that you can have your stop at the second candle wick, and as you would have seen, you would not have got stopped out. However, you probably would have been more inclined to partial, as your stop loss would have been tighter. Speaking from an emotional point of view, obviously in a different point of view, this is perfect to hold because it's a perfect trade, but if your stop is here, you're not really gonna not put it to break even. But then again, knowing we've got such a strong draw on liquidity, like look at this, we don't even body close over it. we've got our new day opening gap and our data high right there. That would have been a 5R. Bang. Super simple. So yeah, honestly, what more could you actually want? Like the way I trade is so mechanical, and it's not some way of trading that's like been made by other people. Yeah, other people trade it, but like the aspect of trading with withdrawing liquidity with the opening range gap and nude opening gaps, that's not done by traders. That's not concepts made by traders. That is just how the market is. I know ICT speaks about it, but ICT didn't invent the nude opening gap. The markets already did it, and ICT just teaches it. So all credit to him. But what I'm saying is, there's not the way I trade isn't made up by someone else. The markets are designed like this, and thank you to ICT for teaching us and spreading light. But this ain't no, just random stuff. This is how the markets work, and no matter what retail strategy, no retail trader has made this opening range gap because of the last print to the open. That's not done by a trader. That's just how the markets are. So we're trading pure price action, pure like, I don't know. We're literally trading how the markets are supposed to move. And if you're still not convinced, look at how precise this is. We do not get a single body close. This is true precision, and this is what you need to work towards. And I'm not saying I'm the greatest of all time, but what I'm doing and what I'm learning and what I'm showing you guys is like all you would need. 100% all you would need. But yeah, that was ES. We'll show you NAS. You wouldn't have taken it on NAS because we had the SMT for ES. But if you did, don't worry, the macro did not forget about you. So we'll mark this up right there. As our CSD, we will get rid of this opening range gap just for the second. So as you can see right here, we get our CSD. When did we get our CSD on NASDAQ? So we can start looking for 1 minute entries at 10 past 10. Okay, cool. So we come down. We do leave behind this OB, 1 minute order block right here. So you could have marked that up. As you can see, price does not body close past this OB. It's just true precision. Could have had an entry there. Where else could you have entered? Doesn't really look like much else on the 1 minute. If we come into our macro here, we come down, we sweep out sell side liquidity right here. What else do we do? What do we know about wicks? Wicks gaps, bang. We come to the upper quadrant and 50%. Your entry could be at the upper quadrant. Right there. Stop loss at the low of the wick, or could have waited for this fair value gap to be inversed. We inverse it, we could have gone long from this candle right there. Where could you put your stop loss? You could put it under the fair value gap, or you could put it under this wick. And then our target is new to opening gap and data high. You can't get more precise than that. And with ES, that was literally textbook. You couldn't ask for anything better. SMT, CSD, entry, bang. You couldn't ask for, what else would you need? Even if you partialed at new to opening gap, you're done. Even if on an NQ you partialed at new to opening gap, look at that respect. You wouldn't have on this day, on another day you would have. When you've got a data high, it's literally all you would need. But this one photo alone is enough to make you profitable. And that's not just me saying that, because it is. Let me get a better picture for you guys. Just one single picture. So obviously got SMT right down, data high. We'll just put a bit of text on this. New day opening gap. Bang. That's it. Done. What else could you want? But yeah, that's how I backtest. That's how I do backtest. And yeah, I hope this helped. Let's look at the news for tomorrow. PPI tomorrow. We'll probably watch it. But yeah, that's it. That's me. That's me today. I didn't trade because I was doing other things. But yeah, that's exactly how I trade. Not just looking in hindsight. This is how I trade. This is how I've traded the past couple of days. As you've seen. And yeah. Hope this helped. And I'll see you guys in a bit. And peace.